Okay, folks, welcome to a quick Thursday night stock charts live. We haven't done one of these in a while. I've been doing them for members. I figured I got a brand new haircut, which I desperately needed. I like it. I'm going to show it off. We have some earnings out after the bell, Intel and Newmont Mining. I usually don't talk about the gold mining stocks individually. Usually I just talk about them as a group. But tonight I thought it was a good opportunity. So Newmont, Intel have reported. Tale of two stories here. So let's begin first with Intel. They have reported. I have not looked at their numbers as of yet. So let's take a quick peek. I will digest them. Initially, they rallied, I guess. All right, so that was the knee-jerk reaction, which is frequently wrong. They're not putting their projects in Germany and Poland. They're going to Southeast Asia and Costa Rica. That's forward-looking guidance. 12.62 billion. They look, the way the street looks at forward-looking guidance, they take a look at what the estimate was, and if you're one tick below that estimate on the low end, they treat it as a poor outlook, and I don't think that's right. To be fair to Intel here, Intel sees GAAP EPS. Ooh, margins getting crushed here on Intel forward-looking basis. Oh, actually, yeah, it's bad. That's a negative number. Ooh, bad stuff. So, GAAP EPS was projected or estimated to be a loss of 18 cents. Actual guidance is negative 24 cents. That's pretty brutal. That's a big miss. This is getting to be all too a commonplace. I scratched that. I thought they were pulling some guidance. They're not. As soon as I saw this, Intel will no longer, and I jumped the gun there. That's just the planned project in Germany and Poland. Not a big deal. We already went over that. Q2 EPS misses. Ooh, brutal. It looks as though their margins are getting crimped here. And that's probably why they're not going to Europe and they're going over to Southeast Asia. So Intel not looking good here. Cost cuts. Okay. So we closed at 22.63. The anticipated market maker move on Intel's number was $1.73. So we're within that range. I don't know why they goosed this number up early on. Clearly, they were wrong to do that. That's making the chart extra ugly, but we're within the anticipated market maker move. At current, we don't know where we're going to end up at the end of business tomorrow. Now, Newmont, I'm going to go to comments in a moment, so I see you there. I will get to you. Newmont, the anticipated market maker move here was $3.21. We closed at 61.51. Again, we're within that anticipated market maker move at current. I want to bring up Investors Business Daily for a moment. I want to check out who's the best in this group. Let's bring this over. Now, Newmont is not the best in the group by far. Come on. But their composite rating is really, really strong. The shares are under accumulation, not healthy accumulation, but it's building. EPS, Jesus Christ, last quarter, 127% growth. You could see that the 3-year EPS growth rate was only 11%. So Newmont looking good, and they're not even the top of the group. Agnico Eagle Mines is top tier. This is the Pimp Mac Daddy of the group. These shares are significantly more under accumulation despite closing down. My guess is they're probably reacting positively in the after-hours session in sympathy. Yeah. Nice move after hours here on Agnico Eagle. So, these gold mining stocks, nobody really wanted when we were buying them. They still don't want them. They're under-owned. So, what do you want to own? Intel? I mean, this is a cluster F. Even Taiwan Semi best of breed doesn't even have what I believe to be as bright of an outlook as the gold mining stocks for now anyway. But remember, gold stocks are cyclicals, whereas semiconductor stocks are non-cyclical. So I think you have an opportunity here to add more to the gold stocks. Earnings look really, really good. Lee Cable, welcome. Polish Taco, been a while. How you doing, pal? Well, good to see you. Michael Anthony, will Pfizer make a move higher? Not sure. I'm not doing chart requests tonight. If I think about it and I have it up, I'll go over for you. Short the semi group. We are building on shorts. I'm not ready yet to add more until I see a crack in the market. So we're going to go over the weekly charts tonight. We'll take a look. We'll look at the volume. We'll take a look at the semis, and we'll see how we're about to close out the week and how next week might look. We're going to be taking a look at the yield curve. And most importantly to me, and this is what I've been pounding the table on for quite a while now, is what is the threat of a breakout on the 10-year yield? How is that looking? Do we get a continuation move higher along with the 30-year bond, which is already broken out, moving up higher, down on the week? We'll talk about high yield debt. That looks like it's getting very, very toppy. So as the bond market begins to roll over here a bit, perhaps we got to take a look at the TLT. If we get a breakout in longer term yields, that could be the threat to the equity markets here. So let's get to it. Let's talk about the weekly charts. Now, before we get into it, we're going to kick it off with the Shiller PE ratio. Folks, we had an historic event yesterday and today. And what I mean by that is that the Shiller PE ratio, as of yesterday or the night before, if you want to say on a closing time frame, as of the night before last, the second all-time most expensive the equity markets was October of 2021. You'll remember the meme stock rally. So we pulled back, went into a brief bear market. Yesterday, we took out those highs from October 2021. Today, we continued up higher. we are approaching a 40 handle for the first time on the Shiller PE ratio since 1999, my first bubble. And I can tell you, it feels a lot like it. There is zero negative sentiment out there. We're going to talk about the put-call ratio. We're going to talk about the bullish percent index and how much apathy there is out there in this market. And we are heading into a seasonally not great time of the year. August is not the best. July is one of the better months. So let's continue on. What's the Federal Reserve going to do? In fact, they released this evening their balance sheet. Let's see whether or not they are riding to the rescue, which I highly doubt, because Powell must despise Trump at this point. Unless, of course, it's all a show, which you never know, it certainly could be. So here's the Fed's balance sheet. We've kind of leveled off here. I mean, we're lower versus last week, but by a couple of million, I mean, not a lot at all. I mean, it's a rounding error. So we're flattening out here. And this is the longest consolidation that I've seen on this chart in a very, very long time. I think the last time we saw a consolidation as long as this, it's back here, where they goosed it up higher. This was the regional bank crisis. You remember that? I was in an airport heading down to Palm Beach, and I was watching that. I was like, Jesus Christ, of course, I'll be on an airplane when the market opens and have limited access to the markets. So the Federal Reserve has clearly stopped rolling off debt off of their balance sheet. I would argue you can go back to May, where they boosted it up higher. We've really done nothing since May. So that could be keeping a lid on bond yields right now, longer term. I'm talking about 10-year, 20-year, 30-year bonds, not the short duration. So if the market believes that the Federal Reserve is going to stop selling debt, and I would argue that one of the primary reasons of why we're rallying right now is M2 money supply liquidity moving up higher, and the Federal Reserve is clearly paused here on rolling off debt off of their balance sheet. I think that if they did not, you would see bonds selling off and yields moving up higher. Something's happening. Now, looking at the expectation of a rate cut going out and into September, it's a coin flip. We're back down to around 60% probability. Actually, this is why I refresh it so frequently, up to 62 now. October, below 80 again. So it's a long way between now and that September meeting. This dips down below 50. The equity market may have a problem. Bullish percent index on the NASDAQ. We are very, very complacent here. It can go higher. Historically, we have gone higher at times. Let's go to a monthly chart. Here was around the peak of the Shiller PE ratio. When was that? Was October 2021. You could see that sentiment was drifting off, and that right here, This is the peak in valuations right here, and the market sold off dramatically. We're still in an uptrend here on the bullish percent index. So lots of apathy out there. Bullish percent index on the S&P 500. Grinding up higher. I think we're going to break out higher. I think it's quite possible. Not probable, but quite possible. CRB commodity index. We're watching this to identify whether or not we're seeing a lot of inflation in the commodity markets. If you see a breakout here, you need to expect to see the probability of an ease go down because the Federal Reserve will be concerned about inflation. Nothing happening here. Another sentiment index or indicator, which I mentioned earlier, was the put-call ratio. Now, puts relative to calls, we're off the lows of the month. We were lower. When what this chart is telling us is that there's a tremendous amount of, again, apathy as measured by the bullish percent index on the NASDAQ, on the S&P 500. This is just a validation tool. It's telling us there's not a lot of people out there buying puts on the market. So when you're down this low, you know, we could stay this low, but the reversal could be pretty nightmarish. So we were down here in February, I believe, January, February, and you can see this is the S&P 500 overlaid here where it took a major tumble. And we're well beyond that price point at current. So sentiment, very, very bearish for equities. You want to climb the wall of worry, not the wall of greed. Yield curve. This is updated. The yield curve is pulled back quite a bit, but we're still holding the breakout point from 2 weeks ago. Bonds. Let's go to my saved chart. I want to set up some support and resistance levels here on the TLT. iShares are all the way down here. Here we go. Okay. So let's do this. So here's our upper band of resistance. And here is our lower band of support on the 20-year bond, longer-term bonds. Remember, if bonds go down, yields go up. So we identified a while ago now that we had a head and shoulders setup forming on the 20-year bond. Left shoulder, head, right shoulder. Here's your 45-degree neckline. I'm not going to say that it's definitely going to break through, but it doesn't look great. So you can't trade this right now. It's in the consolidation. It's in God's will of which way this is going to go. Let's see what it did on the day now. There's nothing happening here. Maybe a higher low. Maybe we break out. Maybe we don't. There's nothing happening in the bond market. And the 10-year yield, it's just been in a long-term consolidation. And my worry here is that what we're doing is we're setting up for a higher low on momentum. Just imagine if this hooks up. Imagine the higher low you'd have on momentum. That means that in all probability, you have the 10-year breaking out. RSI, which is another momentum indicator, stalling at that upper band of resistance, but we're going to be watching for a breakout there. And many times you'll see a breakout first on RSI, then you see price action breakout. So there are times where RSI could be a leading indicator for whatever you're trading. Bonds, yields, stocks, cupcakes, doesn't matter. Now, moving on to tips. Treasury inflation protected securities in a bull market, clearly implying that institutions are still very, very concerned about inflation. Not many retail investors buy tips, Treasury inflation protected securities. This is usually the institutional investor. So this gives us a glimpse into the mindset of what the institutions are thinking at current. Now, the dollar, this has the potential to become a very, very ugly chart because we had broken out here the week of June the 16th, outside reversal bar. We had recaptured a support level, 2-week rally. Now we have a new weekly lower low. And volume, with one trading day left to go, is already measurably above the moving average. So this does not bode well for the US dollar moving forward, especially, I'll tell you one thing right now. If you see the Federal Reserve's balance sheet move up, that means that the Federal Reserve is buying back bonds. They're monetizing the debt. So this is the shenanigans that they've been pulling ever since the dot-com bubble. If they do that, you are going to see the dollar drop like a rock. So be very, very careful. You're going to want to start looking at gold stocks, gold, silver, platinum, palladium, oil, whatever you could drop on your foot and it hurts, you want to own it. Japanese yen up on the week, new weekly higher highs. Weekly Stokes are still pretty ugly. Momentum not firm yet. I'm not a buyer of yen. Euro getting ready for a continuation move up higher. Big bull run here. Big bull market on the euro. Bitcoin, let's refresh this. It's currently trading. No new weekly higher highs this week, but a consolidation. Still a very healthy chart. Volume extremely light. Volatility. Let's go to the weekly view first. Now, the weekly view here to me looks like a train wreck for volatility. It looks poor. We've broken to new multi-week lower lows. That 16 mark was very, very critical support for volatility. So if we close where we're at or worse on the week or down below 16, in all probability, this market has the ability to move up higher, at least the S&P 500. Now, back to the daily chart. You can see that we did a bit of a reversal on the day. We rallied off the lows of the day. And, you know, I'm looking at the earnings on Intel. I'm looking at the price action on Netflix, which had really good price action, really good earnings. And the shares have been down ever since earnings. So what I think we need to do here is reflect back on companies that have reported. And if they're good numbers, like Alphabet had good numbers today, where is it going to be a week from now? In fact, let's take a look at how it closed today. This is not great price action. In fact, I would argue it's concerning price action because we sold off the highs of the day. And the last time we saw something like that, meaning you can get them at the lower end of a trading range, that really doesn't matter if you're bullish. When you're at the higher end of a trading range and into overhead supply, and you get one of these like you did back here, you could get some weakness. So, well, I'm not saying by any stretch of the imagination short Google. I'm not saying that at all. I'm just saying keep an eye on it, that if it follows suit with the behavior of Netflix, meaning your price for perfection at earnings, not that Google was. I believe that Google's pretty inexpensive relative to Netflix and other companies out there. But when you report earnings and your stock should go up and they don't, that's a tell. It means they're booking profits. Be careful. So let's keep an eye on Alphabet. We did Bitcoin. We did volatility. Let's talk about the indexes now. Dow Transports first up, and we are up 2% on the week. We are consolidating. Odds clearly favor bulls here. Volume above average. Let's go to a daily view. So a reversal day, odds still favor bulls here on the Dow Transports. Now, taking a look, weekly chart, Dow Jones Industrial Average, weekly view at current, trading above a 0.75% move higher on the week. We are off the highs of the week. Volume thus far on the week. We're going to come in below average. Let's go daily view. Now, we had a very nice breakout on the 22nd, follow through yesterday. A little bit of a retracement, not too concerning. Where you want to get concerned is this. If, let's do a hypothetical, and I'm not predicting it. This is a pretty good chart, even despite the fact we closed down today. If we failed on a retest to hold this support level and trade back down into this trading range, that's when I would get nervous about the Dow Jones Industrial Average, because that would be a breakout point failure. Volume today, very light, not concerned. Weekly chart, S&P 500, new all-time record highs, validated by money flows. I was in the pool. My eyes rolled dried out. Stokes are extremely, like nosebleed levels here, overbought. So this is going to unwind in the next week or so, probably into August. In fact, I want to do this. I want to bring up TrendSpider. I want to talk a little bit about seasonality. Folks, if you're not a member of TrendSpider, you ought to be. Link below. Get 35% off using discount code CON35. Discount code CON35. You got to use the link below, though. Let's bring up SPY. Clearly let's clean this up a bit. Clearly a healthy chart. I mean, we broke through quarterly resistance. This is a powerful chart. The fact that we broke through after the rally off of the April lows, the fact that we broke through all of these resistance levels and now a quarterly resistance level, pretty impressive. Now, ever since, I wish they dated these weeks. Ever since, let's call it the final week of June, this is a seasonally favorable period of time, one of the best periods of time to own stocks going back 19 years. Next week, it becomes more of a coin flip which way the markets go. And it kind of deteriorates into September and October, which is traditionally more of a volatile period of time. So keep in mind all of the sentiment indicators we've gone over already. Put-call ratio, bullish percent index, all very complacent. Lots of people enjoying this bull run up higher. They're bragging about their earnings over the barbecue with a beer, rightly so, good stuff. But as traders that are looking at the data, we know that it's wise to keep an eye on the seasonality and appreciate the fact that we are moving from a seasonally very, very strong, favorable period of time, these are weekly charts, into a more distorted, volatile period of time. Buckle up. Now, taking a quick look at the QQQ, again, a very impressive chart here. Weekly view. I mean, we could easily head up higher from here. This week is one of the best weeks out of the year. Next week, completely different story. One of the there are a few weeks here we have 42% up weeks. The worst week is week 19. I wish they had dates here. But we're heading into a choppy period of time for volatility on the Qs and on the S&P 500. Doesn't mean we can't move up higher. It just means that it may not be an easy melt up as what we've seen. So just be careful. Maybe tighten up stops, trailing stop loss order, whatnot. Protect those profits. Let's go back. What else do we have here? This is the equal weighted, the RSP. And I keep this up here to identify, is the market being driven by too few stocks, such as what we see in the SPY, which is a market cap weighted ETF. Market cap weighted. So only a couple of stocks could drive the S&P 500 or the SPY up higher. The same is not true for the equal weighted. And so are we seeing a divergence? Are we seeing RSP down while S&P 500 up, which would signify that, you know what, way too few stocks driving the market up higher? No, you're not. This is a healthy move up higher. I would argue that we are still seeing an outperformance of the SPY relative to the RSP, but both confirm each other's move. Qs, a very, very overbought weekly time frame. I draw these lines, very, very overbought. And I don't use that phrase loosely. Usually I do this, air quotes. We are very overbought here. Doesn't mean we can't move up higher. We probably will. We are now in the parabolic stage of this melt up. How is volume on the week? It's light. Maybe we come in about average. Let's go daily view here. Daily view on the triple Qs. We broke out today, whether it wasn't a pretty breakout. We faded into the close, but we broke out on the day nonetheless. Nice little triangle formation. God. We have a little bit of a bearish divergence on money flow. We broke support. No reason to dump all your stocks and get short. Just something to watch out for. Let's take a look at a 30-minute view and see how they close out the day here on the Qs. It gives us an indication of how they might open us on the day. And it was not a good close. In fact, I would argue it was pretty bad of a close. We have lower highs on RSI, lower highs on Stokes. Stokes are clearly rolling over. We sold at the lower end, at the bottom of this 30-minute candlestick on pretty heavy volume. So we may get a weak open tomorrow. I don't think Intel is going to be a real influence. Now for the equal weighted Qs versus the market cap weighted Qs on the week, the cap weighted are up 0.67%. The equal weighted outperforming the triple Qs. So the broader based ETF, the QQEW, is actually outperforming the market cap weighted triple Qs. So this tells me that this can continue, at least on the equal weighted. You may see a pause on these mega cap stocks, much as what you saw on Tesla today. What did that do today? Let's take a look at a weekly view of Tesla. Down over 7.33% on the week. As bad as this is, on a percentage basis, we haven't broken trend yet. Here's the daily view. Not pretty. Big volume today, big gap down. Tesla not looking good. The banks looking very, very good here. Good legislation coming through for the banks. The banks are going to be just fine. I'm very impressed with the price action so far in the week of Citigroup, up over 2% on a tear. I haven't looked at the other names. JPM, up 1.81%. This looks like it's going to break out new all-time highs. Let's check in with my father's favorite stock in this group. Morgan, up 1.19%. Looks like it's going to break out. Technology, new all-time record highs. How's volume? A little bit light. We couldn't meet the moving average tomorrow, to be fair. Semis, down on the week. Interesting. So the question was asked earlier by Polish Taco, is it time to short the semis? I don't think we're there yet. I just don't think we're there. If you want to take your crayon out, we could do this two ways. In fact, we'll do it both ways. You could do it the manual way. That's a very, very tight ascending wedge formation. This is either going to get resolved up in the next couple of weeks or down in the next couple of weeks. So would I short it now? I wouldn't mind nibbling, especially if you'll notice here that we are trading down below the lower band of that support level. We close down tomorrow on the SMH. I would nibble, maybe open up a position, but always remember, usually stocks, indexes, whatever, if they break a support level, they'll try to do a check back and try to recapture, because remember, there's so much bullish sentiment out there. Nobody wants to believe the party's going to end until, half their profits are gone. So nibble, stay very, very small, nibble, 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 but we're nearing an unsustainable phase in this rally. Now, taking a look at semis, they can move up higher. This is a weekly chart. They can move up here to around 310. Let's check in with seasonality, weekly view. You can see that the trend for performance begins to grind down. I would call these weeks not negative weeks, but I don't view 50-50 odds when trading a good odd. I think it's bad odds. I would rather know here on this poor week, one of the last weeks out of the year for semis, I'd rather start buying here in anticipation of this grind up higher going into January and February. Let's see what else we got here. Software looking really good. A couple of weeks ago, this was not looking good. Last week, great reversal bar. This is going up. IGV looks awesome. Volume a bit light on the week. One trading day left to go. Daily view. I think it goes up higher. There's no reason to short this. No reason to sell. Biotechs, good week thus far. We own this. up 4% on the week. Staples. So I keep going back to this. For those that watch, you're going to say, oh, Christ, here he goes again. So you remember when we came into the new year, right here, we had a sell-off in the equity market, but what recovered quickly and what held ground into that that April sell-off was the staples. Even the bond yield, TLT, was down during this time frame, but staples rallied. And take a look at this weekly consolidation. We broke out. Well, we broke out here, failed. We re-broke out here April the 14th. So we have a multi-month now consolidation. I think this is getting ready to rip up higher, especially if the equity market goes down. Because, and I'll put it this way. If you see on an equity sell-off, bond prices sell off and staples don't, I'm a buyer of staples. Why? Because money flows are not viewing bonds as a safe haven as much as they are seeing the staples as a safe haven. You have capital appreciation, you're getting the dividend. Enough said. Emerging markets, no China here, only ex-China, looking good. They want to go up higher. And if the dollar breaks lower, these are going up a lot higher very, very quickly. Leveraged product with China, up nearly 3.5%. Bullish stuff here. I've been saying emerging markets are the place to be. We've been long them for a long time. I think we got to start looking to add more. Energy stocks on the week, bullish key reversal. Underperformers. If oil breaks out, if the CRB commodity index breaks out and the dollar breaks down, you got to buy oil, not because of global growth, but because it's stuff. Inflation's on the rise. People want to own stuff that gains in value. West Texas Intermediate crude on the week. Not a great week, but the energy stocks, they're firming up, looking really good here. Gasoline prices doing nothing, down on the week. Good for the little guy, good for the consumer. Gold up on the week, but we're well off the highs of the week. Stokes are struggling here. We may get a higher low. GDXJ, we own this. Looks like it's struggling here a bit. Volume very light. Let's go to a daily view. I want to get a vibe for what we did today. Breakout point failure. So we broke out on the 22nd. We failed to hold it today. Warning flag on the track for the gold mining stocks. How do you buy oil? So I could pretend that I'm a hot shot, but I won't do that. I have a futures account. I don't like owning futures contracts for any length of time. I will sell the futures contracts. I'll sell puts, but hedged, or I'll own the USO or derivative, a leveraged product, putting you long of oil. So that's the way I would play it. If I trade natural gas, I like more volatility, so I'll buy Boyle versus the non-leveraged product. And definitely I will not buy futures on natural gas. Yeah, so Paco, that's a good point. I find it hard to believe that the market didn't expect the DOJ investigation into UNH. Let's bring up that chart. So let's talk about seasonality here a bit. This is the third Fourth worst week out of the year for UNH. This is not a great seasonal period of time to own this stock. Let's go to a monthly chart. Yeah, going into September, seasonality not wonderful, but let's face it, what the share price normally doesn't go through a sell-off like this every year or even every 10 years. So we don't want to. We'll pay attention to the seasonality, but not as much as we ordinarily would, because we could be in a phase right now where, institutional investors, they're not satisfied unless there's blood in the streets and they're buying at a discount, with the retail investor giving up all their stock out of panic. So while, yeah, we can head lower here, I've been saying we can hit around 270. Is 250 out of the realm of possibility? No, it's not. But let's see whether or not they hold the the support level is around 263 per share. Let's go to a monthly view. Oh, the monthly view is not good. I warned about this. Oh, God, what was it? I know I saved the chart. I know I saved that chart. I thought it was on TrendSpider. Oh, maybe it was. I took my drawings off. Yeah. So this had to hold. And we sold half of our position above 300. I was worried it couldn't hold. And this was our next price target, 280. And then I believe I did another chart of UNH. Yeah, here. This was it. Bear flag setup. And this is why I was concerned. So right this week here, the week of, what week was that? July the 14th, we sold half of our position. We bought it all the way down here. And I still have some. But, yeah, it looks like we're going to go lower. So I may be putting in a stop loss here on UNH. If we gap lower week over week, we'll just bail, head back in, and pick up the shares at lower prices, because this chart here, the weekly chart, is telling us that we could see a 260 handle on UNH. What else do we want to talk about? Silver. Silver looking good here. A little bit of topping action. But I think what we need to do at this point in time is take a look. We're so close to the end of the month. Let's take a look at how we're looking on a monthly chart. And you could see here, I don't want to duplicate charts. Do I have a monthly setup? I do. As a matter of fact, I have a quarterly setup. Look at this quarterly breakout here on silver. This is a screaming buy. Now, granted, this is the first month of the new quarter, so let's be reasonable. Let's just go, because a lot could happen over the next 2 months. But this looks great. We have resistance immediately above here. We break above 71.60 on the AGQ or on the SLV, which most people trade. It's already broken out. AGQ is lagging. That's that deterioration. Silver's on a rip your face off rally. Good stuff here. A little bit extended, but it can continue up higher, no doubt about it. What else do we have to talk about? Silver miners. Weekly chart, they're up. Palladium. Reversal week. They were extended here. No great shock. FLNG. We'll own this. This is an LNG, liquefied natural gas trade. We're getting paid on this one over 13%. EOG Resources, energy stock we own. EOG looks like it's setting up for a bull flag setup and a major breakout here I'm liking this setup on EOG Resources. Boeing, I booked some profits here. We bought Boeing down here. Nobody wanted it. All the news was horrible. Horrible. We stepped into the breach. We're up over 50% here on Boeing. I still think it moves up higher. They are reporting earning. I want to protect profits. The market's very expensive. No shame in raising some capital. It became way too big a portion of our portfolio. We scaled back. We have cash. Now we can put it to work elsewhere, whether it be to the short side or into something long that looks really, really good. Maybe the staples sector or a really great name. I haven't looked at it today, but last night it looked really good. Yeah. Altria, looking good. If you like a yield, I think this is yielding over 6%. That's not what I wanted to do. Yeah, nearly 7% yield for you folks that are dividend hunters. And you're going to be looking at upside appreciation on the share price. So I wouldn't be an aggressive buyer just yet. But, man, we close above $60.63. Mo is going up higher. Let's watch for resistance levels here. So the algorithm is not picking this off, but my spidey senses are picking up on a big, beautiful bull flag setup on Altria. I think it goes up, and plus you collect a dividend. You got a little bit of insurance policy in case high-tech beta goes into free fall. Let's check out seasonality. Good period of time to own this stock. August is a good month. September, coin flip, and then you go into a strong October, November. Then we go back to coin flips. And that's it, folks. Thank you for being here. Folks, we have 130 people on right now. If I could ask you to please like, subscribe, and don't forget about TrendSpider. Use my link below. Get 35% off CON35, CON numeral 35. Get 35% off. Everybody have an awesome evening and have a profitable trading day tomorrow. Talk to you on Sunday Night Futures Live. See you there. Be well. Bye-bye.